Good morning, good morning, good morning. Yeah. It's a wonderful Monday morning. I am trying to get my IG up. How are y'all doing today? Um, it is Monday, August the 14th. Go to YouTube. Go to YouTube. I was listening to the Breakfast Club the other day. Hey, baby, why you ain't on YouTube? What you doing? I was on the Breakfast Club. I was listening to the Breakfast Club the other day, and DJ Envy was imitating aliens, and he was like, "Take me to your leader." Okay, what's up, E-Rock? What's up, here to learn to share? What's up, Kim? What's up, Hines? So going into today, for those who was on the live with me yesterday, let me say this. I know I vented about this on the live stream yesterday, but I would like to reiterate that it was a lot of people who said that they wanted to do these super secret ICT sessions with me on Sundays. And I take the time out of my wonderful schedule with my family. I love nothing more than spending time with my family. And every week, there's only 2 or 3 people on the live stream with me. I am sick of it. 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 But they can't see where we're going. Who remember the Backyardigans? Into the thick of it. Into the thick of it. Into the thick of it. But we can't see where we're going. E-Rock, don't you play like you don't know I had a live stream yesterday, E-Rock. Don't you do that. Don't you, E-Rock. E-Rock. E-Rock, I don't think you've been on Now Live. Have you been on Now Live stream, E-Rock? Now Live? Have you been to Airtime? Airtime? Is Michelle in here? Michelle in here. Here, learn to share. Has E-Rock been to Airtime? Out of the 6? You know what I'm crying about. I'm always crying about something. I'm always crying about something. I'm going to cry about something. Speaking of cry about something, hold on. Come here. Come here. Coochie, coochie, coo. Coochie, 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 coo. Lil Hawk say I plead the 5th. Lil Hawk say I plead the 5th. Lil Hawk say I plead the 5th. It ain't about the replays. The purpose of it was to be there live. And I understand people have stuff going on. They ain't gonna be there every week. But it's people who ain't never been there. Never. And 6 weeks. I even did one while I was on vacation. I even did one while I was on vacation. And it's people who ain't never been there. I still be putting the email, put the email on there. I still put the email on there. Cause my wife said, if you're gonna do it, do it. If you're gonna do it, just do it. Don't complain about it. If you're gonna do it, just do it. So let's get to reading the tape. Let me get my screen together. Let me get my screen together. Let me get my screen together. Boop, boop. Okay, I think I remember how we do it. 15. Let me get my fancy dancing on. My fancy dancing not on. Y'all hold on, man. I got to turn my fancy dancing on. Hold on. Did I restart my computer? Okay, going into today. Going into today, for those that was on the so we got an hour here, 15-minute, 5-minute, right? For those that was on the live with me yesterday, I shared my thoughts of going into today, and I said price, what was price? Price was here. No, price was, yeah, price was here. I said I wanted to see, matter of fact, I got it on the screen right here. Right, this was my preferred right there, preferred price move. Right, that was my preferred price move for the week. Right, that was my preferred price move for the week. Attack this buy side, preferably get up to this fair value gap, and then make its way back down to attack the sell side in this daily fair value gap that we didn't finish on Friday. I said that was my preferred price move, right? We took out the buy side. We took out the buy side in London. Respected this new week opening gap, and then now we're proceeding back down. We just got below midnight. We just got below midnight on the 8:45 candle. Retested it again at 9:20. And now that the market is open, we retested it again. So we're tapping midnight right now. Oh, let me start this by saying this. I know on Friday, if you tuned in Friday, I know you saw where I gave out a trade recommendation. This is not a call out room. This is not a call out service. This is just for us as family members to get together and read the tape. So, only reason I did that on Friday is because Friday is a typical day that I would be trading, right? So, since Friday was a typical trading day, I said, hey, price still haven't given me an entry, right? So I went low. I said, hey, this is an entry right here that I would personally be taking. It was given off of the 2022 mentorship model, and we messed with Rocky. Shout out Rocky if you're listening. We messed with Rocky a little bit. And so, but today we're just gonna read the tape. We're not calling out any, and I probably won't do that no more in the future, because I'm probably only gonna be doing it on Monday unless I just be bored. But that's not what this for. This is just to read the tape together. Now, that was my preferred move. Getting above this. The reason why that was my preferred move was because this hourly fair value gap was in the premium from it was right around equilibrium. I think it was around equilibrium or the premium. I don't know. Let me see. Yes, it was right at equilibrium. So boom, get up there and get a reason to sell in the premium, and then come down. That's killing three birds with one stone. Taking out the highs, repricing the imbalance, and getting up to a premium to sell off of. Right? Three birds with one stone. Now, we have taken out the highs. We have respected the weekly, the new week opening gap, and we're coming back down. Now, where is price now? Price, we are at an hourly order block. Price just hit an hourly order block. We just went below midnight. If the bullishness is to continue today, price has opened and went back down below the midnight open. You know, Real talk, Tim. I didn't see a notification yesterday. That's cause you your email wasn't on there. You don't trade ICT. You trade DR. You don't. Hey, speaking of DR, Robinson, I was listening to a Twitter space this weekend by some people that I be following, and the dude, the Master Seven, he was on there too. It was him and a bunch of other people talking, and then guess who pulled up? ICT pulled up and talked too. So you had Master Seven, ICT, and a bunch of other ICT concepts, but it's like they, you know what I'm saying, they was just talking and being normal people. Because it's crazy, neither one of them got beef with each other, but it's like the communities try to make beef. And then when you see tweets and you don't understand what the person meant by the tweet, and then the community be making beef and it get bigger than it should. But both of them was on there, and like Michael talked highly of everybody on there. Everybody on there talked highly of Michael. Is like, you know what I'm saying? Like just like back with the East Coast, West Coast thing with Tupac and Biggie, they ain't had no real beef. It was just the fans. Anyway, that was for Robinson and Angela, anybody that trade DR stuff. Oh yeah. So if the bullishness is going to continue, right? It has come back down below midnight. If you're thinking of a power of three concept, right? The power of three played out in London, where price dropped below midnight and then closed up near the high, right? So let's come around 5 o'clock. Boom, 5 o'clock right there. So it's like we went below midnight during the London kill zone, like around about 1:30, the buffer window, right? Went up and then closed 5 over here. So we went below midnight, went up, closed near the highs, right? So now we've come down, and then now here we are in New York kill zone, right? So we get into New York kill zone, we come down, and we've gone below midnight now. Now, what we're watching, what I'm watching, right? This hourly fair value gap that I was up trading in the Asian last night, something that I usually don't do, but I was just up trading the Asian. Just, I was bored. So we got this hourly fair value gap that I marked out, right? We're below it. So if we're below PD arrays, we anticipate them to be resistance, right? We anticipate them to be resistance. So therefore, we've gone below midnight, right? And we're pushing back up. We hit this order block. We're still respecting that. We came down. We respect that order block there, right? We've come down again. We're respecting that order block there. So we're still respecting the order block, right? This is an hourly order block that we're respecting. We're still respecting the order block. Now, let's look at the lower time frame counters. It's 15 minutes here, but I'm gonna put it in the bigger window. Right, so 15 minutes. On the 15-minute 15 candles. So on the 15 minutin, right? We're fighting with a 15-minute SIBI, right? It's acting as resistance right now, right? So we've offered the buy side delivery, right? Came back down, and we're flirting with it now. We've come down to a 15-minute order block also. So we got a 15-minute order block also. We've gotten down below midnight. This is something I was looking at last night when I was trading. I don't have anything in there. A lot of times when I'm just trading, I don't be like I just put it on there so I can watch it, but I don't be marking the time frames. So it's probably something I was watching on a lower time frame or something. But That's right around the midnight. That's some kind of imbalance that I was looking at last night. So we got this 15-minute SIBI that we've offered the buy side to. We're below it now. So it's acting as resistance right now. Still acting as resistance, but we have a new SIBI right here. We're going to move this over here because we have something to replace it with, right? So we got a new SIBI to replace that with. This is an active SIBI. Let's make this gray. So we're no, that's just anticipated resistance. Anticipated resistance on the 15-minute. So we got a 15-minute SIBI right here. 15-minute SIBI right here. Okay, so all right, so we took out the buy side, right? Came up, hit the bottom of that. I think that's the old weekly. Yes, the old weekly fair value gap. Then we sold off. Now, just based off what price has done, these lows is what I expect to be attacked. Why? Because we took our buy side, right? Rejected off of it, right? Took it out, closed near it, pushed up to the new week opening gap, closed below it, failed to get back above it again, heavy displacement down right here. So this is what I'm looking at right here. This low at 44.65 even. That's what I'm looking at right there because of what has happened, right? I'm not going to hold you. I would prefer for it to get up into this SIBI, right? Even up to the bottom of this old new week opening gap, right? This is the new week opening gap. This is the current new week opening gap, the little one right here, right? At least get to the bottom of this old new week opening gap. But I would prefer to it to reprice into this SIBI and then come after these lows. Right? The dollar is looking strong on the 15-minute. Let's look at the dollar. The dollar has blown past. I was watching the dollar to come to this volume imbalance, right? This bearish volume imbalance. Last night when I was in here, I think the dollar was like around here somewhere. Yes, it was. This is 9 p.m., 8 p.m. Yes, the dollar was around here. I was looking for the dollar to come up to this right here, but we've blown past it, and the dollar is streaking for this weekly high up here at 103.572. So if the dollar is going to keep up the bullishness, that should lend weakness into the indexes. Should lend weakness into the index. Unlike the forex be like a mirror to the dollar. Let's look at the Euro USD real quick. They be, see that they be like a mirror to the dollar. It's like with forex and the dollar, they be like mirror images most of the time. That's why I be looking at the Euro USD, because I be flirting with the idea of maybe trading forex. So we've gone below midnight once again. Again, like I said, I would have preferred for this to get up into this 15-minute SIBI and then attack this sell side. Let's what are y'all talking about over here? Let me put y'all over here somewhere so I can see what y'all talking about, man. How can I do this? I know y'all like, Tim, what in the overcomplicated is going on? Is the community? Oh, is what the community want? Okay. Black Al Davis. Hey, stop putting dissertations in the chat. Um, was there any movement in the Asian market? ICT says there's usually not a whole lot of movement. I don't care what ICT says. I am a trader. I trade what I see. Sometimes it be a lot of movement, sometimes it don't. It was enough movement for me to take trades last night. But Black Al Davis, do not care what ITT says. Get in your charts and study price for yourself and decide what's the best time for you to trade. We pushed back up to so far we poked into that 15-minute. If we just bounce off of this, that would be, for anyone who does not know, that would be an institutional order flow entry drill. If we proceed down from here, we've poked that 15-minute. If we proceed down from here, that would be an institutional order flow entry drill. I see over here, we have also poked into a 5-minute SIBI there. There's another 5-minute SIBI right there. Let me copy this over. It's on a 5-minute chart. Now let's refine this on the 5-minute chart. Now we have a 5-minute SIBI there. All right. We got a 5-minute SIBI there. We got a 5-minute SIBI right there that we just poked into. Since the ES was going up, but the last swing failed to get as high as the one beside it, would there be a mitigation block somewhere in that consolidation? The mitigation block, you would not look for it in the consolidation. I like to look for my mitigation blocks at the place of the move, the initial spot of the move. If anything, I will be looking for a mitigation block like over here somewhere, or yeah, something like that. Yeah. When it comes to PD arrays, like breakers and mitigation blocks, they can be found anywhere. But I try to stick with the criteria of what makes the PD array, right? So let's walk through the criteria of what makes a mitigation block. What makes a mitigation block is when you come to an area of anticipated support and resistance and some type of reversal, right? And so when you get to that area, bam, right? You come here, bam, you get to that area, and then you react off of that area, right? You come down, and then when you go back up and fail to make it, and then you drop and you break a low, right? Whenever it's inside this right here, like consolidation there like that, I look at that as time distortion. And the reason why I look at that as time distortion is because this is in the time when the algo is it's outside of the kill zones. Like this, like right here, the kill zone for London stops right there, 5. And this consolidation is like inside the dead zone, right? And then we don't come back to a new kill zone until like over here somewhere. I started watching at like 8:30, right? So I look at all of this as like the time distortion. So it's like I wouldn't be even trying to look for a mitigation block in this area. I will be looking for a mitigation block at least like over here, right? Over here, because this is a low, right? You got a low there, went high right there, and then we came back down and we broke that low, but we didn't, you know what I'm saying? Like we went up, came down. I'll be looking for like over here somewhere, right? Because it'd be like down, up, now come down. Like I'll just blank all of this out right there, right? But I wouldn't be looking for it over here because it's like picking straws, right? I only look for where it's very clear and during the time, during the kill zones. You know what I'm saying? I want them in the kill zones. I want them during the time when the algo is active, because that's when the algo is going to be set in those reference points. It's going to be set in those reference points. And the reason why I said at least over here, because this right here was an order block that was set during a kill zone, right? This is an order, because an order block going to turn into either a mitigation block or a breaker. You see what I'm saying? It's going to be a mitigation block or a breaker. So it's like, this is an order block. And on this side of the order block, we didn't take out that high. So when we cut through that order block, now I'll be looking for it as at least a mitigation block. You know what I'm saying? Because we didn't, this side over here, we came down, went up, didn't take out the high, then came down again, right? That's just how I look at it. I may be completely wrong, but that's just how I look at it. Squirrel. Squirrel. Did I confuse anybody with what I stated? Did I hurt anyone's head? I never realized you only focus on them in the kill zone thing. Yes, everything about ICT concepts, I only focus on it during the kill zones. Is it reacting during the kill zone? Is it created during the kill zone? It, because the kill zones is when his concepts are probable. That's why he always say time and price. Time and price. Focus on time and price, right? Just like the silver bullet. The fair value gap don't have to be created during the silver bullet, but you should only be trading it during the silver bullet window. You see what I'm saying? It can be created in the window. It cannot be created in the window, but you should only be trading it in the window, right? So when it comes to stuff like reference points, I only want to see the reference points that are created in the kill zone. Imbalance can be created anywhere, but I'm only trying to trade off of that imbalance in the kill zone. It's all about the kill zones. All about the kill zones for little Timmy Rogers. Again, we hit that bottom 5-minute SIBI. Reacted off of it. Thus far, it has been acting as a institutional order flow entry drill on the 15-minute SIBI. I didn't mark out the bottom 5-minute SIBI. We went we went all the way to the top of the bottom 5-minute SIBI on this 950 candle and reacted off of it. It's 9:59. Let's see if we get animated at 10. Let's see if we get animated at 10. We're inside the macro window. Again, based off what price has done, I'm looking for the sell side to be taken because we sold off. I said I would like for it to come up into this imbalance and go down. This order block is really doing its job right now. Well, it's not an order block anymore. It would be more of a mitigation block like we talked about, but it's doing its job. We got institutional order flow entry drill here. Again, if the bullishness will continue, this poke below midnight would be lending to the power of 3 concepts if the bullishness is continued. But based off what price has done, I'm leaning more toward taking out this sell side because what price has done here after taking out this daily buy side, right? Taking out this daily buy side up here and rejecting off, I'm leaning more toward this sell side right there. And the reason being because after taking out this daily buy side, right, we blew through the only imbalance that was here on this sell-off, right? So we blew through the imbalance And did we poke below that? No, we didn't. Yeah, we didn't even get below that little consolidation there. So yeah, you know, that's what I would want to see. Taking out that 44.65. If we don't take out our 44.65, then it's more bullish than expected. And that would be a real cracking correlation because the dollar is extremely bullish. Really would like to see an expansion of the DR range, only 10 points so far. Oh, let's look at DR. Look at DR. Robinson just said something about it. We can expand this. We can expand this, and and then the macro would just be punishing. Just punished. The macro just punished whoever was winning, which were the people that was selling. Anybody that had brought their stops down here, the macro, the where 10 o'clock, right here, 10, yep, 9:55, then boom, 10 o'clock Mac from 9:50. It started at 9:50 right here, right? 9:50 to 10:10. We pushed up and got above the consolidation. So it's punished anybody who was short and moved their stops down. And I really would like to see it push up and get into that fair value gap more before taking out that sell side. I really would like to see that. Yeah. So on the lower time frame basis, and if we pushed up some more to get up into at least up into like this 5-minute CBD, let's look at the dealing range on the 5-minute. So on the 5-minute from the drop to the new low, we're in a premium. We got into a premium on the 5-minute. So going down from here is not unrealistic. I just would have why did my phone pause? I just would like to have seen it get further up into this fair value gap. And if we got further up into the fair value gap, that would extend the DR range. We still got what, like 26 minutes, 25 minutes before the DR range close. The London, it never confirmed until here. It confirmed like after it was over. The London DR, what is this still there? It's like 8:30. At 8:30, it closed below at 8:30. Does that count? Like once it get outside of the line zones or whatever you call it, Robinson, does that count when it confirmed like after these lines stop printing? I know this is the DR range, but like once these lines right here stop printing, does that confirmation count? Okay, we just push back up to that second SIBI that I marked out on the 5-minute. We just push back up to that second one right there. And we got a third one on the 5-minute that's in like a nice premium. Is up in a nice premium on the 5-minute. That's up at the new week opening gap. When I was like, at least get back to the new week opening gap inside this 15-minute before taking out that sell side. Nope, London closed at 8:30. Okay. Your charts aren't marked off for kill zone, so do you have them memorized to the point where you don't? Yeah. I don't need to have the kill zones on my chart. And then the kills when I used to have them on my chart, it kind of like was like restricting me because it was trying to force me to make price do what I wanted to do within that box. And I've learned that like everything with price is like an experience thing. So you got to let it, you got to give it like a buffer. You know what I'm saying? Like you can't restrict it to just this from 2 to 5 to I just give it like a little range. I give it a feel. If it's close enough for government work, yeah, we Gucci. Okay, yeah. See now we're pushing back up the macro punished those who was winning, right? It took out the short-term buy side. It punished those who was winning. Remember um what Michael teaches about the macro. It's either gonna it's gonna attack some form of liquidity that hasn't been touched yet, and it typically will punish those who have been winning if it's feasible. And so those who have been winning have been punished this morning if they move, if they trail their stops. Now we're getting back into a premium. We have pushed back up above consequent encroachment of that 15-minute SIBI, and we were reacting off of it. We did not touch the old new week opening gap. I'm cool with that. We we came close to it. Yes, I would like to see us touch it. I would like to see us get all the way back up to this new week opening gap and completely fill in the 15-minute fair value gap. But if it chooses not to do that, I'm fine with that because the bearishness is still intact on the 15-minute, right? The bearishness is still intact on the 15-minute, right? The 5-minute, the bearishness is still intact on the 5-minute, right? And by default, I'm just going to say the bearishness is intact on the hourly because the lower time frames is still showing the bearishness is still intact. I'm going to take this DR off my charts. It's hurting my eyes. Let's go down to the 1 minute over here. God dog it. To go, yes. Now I got the 1 minute over here. Okay, we've touched the we've touched the 1 minute. The 1 minute has shift. Well, it's shift bullish a while ago. The 1 minute shift bullish, but that's to be expected. If we want the higher time frames to get back to a premium, we want to see the lower time frames shift bullish because they have to shift bullish to get us back to there's the expansion. Robinson said there's the expansion. Okay, now we've gotten back up to that top 5-minute SIBI right here. This top 5-minute SIBI, that's the one I'm glad we got to because that puts us right at the top of the 15-minute SIBI. A little bit more, we would have got all the way to the top of it. Let's see if we get that little bit more. If we get back up to the low of this week's new week opening gap at 44.8425, that puts us right at the high of, oh, well, it's 44.8450, pretty much in the same spot. If we get just a little more push, little more push. Oh, and talk about shifting bullishness and bearishness, right? The 1 minute shift bullish, which is to be expected. You want that when you want the higher time frame to pull back. Now, what you don't want is for too many of the lower time frames to shift bullish if the price has been bearish and we're looking for it to draw to the sell side. All right. Always remember, you don't have to get to the sell side, but if that's the draw, you don't want too many of the lower time frames to shift bullish. Now, if the 5-minute comes up here and breaks through this high right over here at 40. What is that? What's that high right there? I can't read the freaking thing. My line is on there. 44.8850, right? Break through that. Now you've gone all the way past this price leg and you've had a bullish breaking market structure. Right? If we get up here and we break this high on this 7:55 a.m. candle, that's a bullish breaking market structure on the 5-minute. Right? And that would start to play back into the power of 3 that we was talking about. We first opened up, was like, hey, if this bullishness continues, this power of 3 would start to play out when we dip below midnight at 9:30, right? But based off what price has done, I'm like, hey, this is bearish price action. So you just follow the bias until the bias proves to be wrong. And what makes that bias wrong? If we get above these here with some displacement. All right, up here into this 5-minute order. What's it? 15-minute order block. We just hit the 15-minute order block. Roughly close to mean threshold on the 15-minute order block. Yep. High. One tick away from mean threshold. That 15-minute order block right there. Boom. See if we respect it. Wicks do the damage. Bodies tell the story. Wicks do the damage. Bodies tell the story. Wicks do the damage. Body tell the story. Went back up to an old new day opening gap. See what day that is. From August the 11th, which was Friday. Friday's new day opening gap. We just got back up to. Wicks do the damage. Body tell the story. Still respecting the order block. Wicks, we got 1 minute and 8 seconds left on this 15-minute candle. That's a 15-minute order block. So we want to see this 15-minute candle respect that mean threshold, right? Whatever time frame the PD array is on, you want to see that time frame candles respected. The lower time frames can disrespect it, but you want to see the time frame, the equal time frame respected. So we're watching this 15-minute candle right here to see if we respect this order block. This bearish order block's job is to block price and keep it down, right? It should block price and keep it down. We got 25 seconds left. 25 seconds left, right? If we close above it, doesn't mean that it won't work. It just lowers the likelihood because you got to give it to the high. But if it's going to do its job, you don't want to see mean threshold closed above. So we close below it. It's still doing its job. Right now, it's still doing its job. We closed below it. It's still doing its job on the 15-minute. Now, we're above this SIBI. Since we're above the SIBI, its job is to support price. So if the bullishness will continue, this SIBI should support price. If the bearishness will continue, we should cut through this SIBI. Do we got any imbalances up here? Tiny imbalance there. Tiny imbalance there. Hong Kong Fue. On 1 minute, This the 1 minute counters over here. So the 1 minute is still respecting it also. 15 minutes is respecting it. Let me put one over here so I can see it on the 5 minute. 1 minute still respecting that mean threshold. 15 minute, we already said that. The 5 minute thus far is still respecting it. We still got 3 minutes and 13 seconds on this 5 minute candle here. We're right now we're on the top side of the new week opening gap for this week, right? That's another PDub rate that we're above. The 1 minute is respecting the fact that we're on top of the new week opening gap, right? The 1 minute is respecting the fact that we're on top of the new week opening gap. The 5 minute still has 2 minutes and 45 seconds on this candle right here. I'm going to turn this gray so that it's not such a distraction. Okay. And then this other one here, what was this? That was a 15 minute. I'm going to take that off now. I'm going to take that one off so that it's not so much going on. I need to turn the gray on this one here. This chart over here not linked. It's not linked over there to the other ones. What did you do? Wait a minute. Oh, that's the 5 minute. That's the 5 minute that I have my. Okay. It's on the 5 minute chart. Why is this not? Why is it not over there? Why is that not showing on that? And put it over there. Okay, the 1 minute is still respecting the new week opening gap. We've gotten back down to the bottom of it on the 1 minute, but we're still respecting the fact that we're on the top of it on the 1 minute. We're still respecting the fact that we're on the top of it. We're still respecting the fact that we're on the top of this 5 minute SIBI that we repriced through. Got 19 seconds left on this 1 minute candle here. We wicked through the new week opening gap down into this BISI. 4 seconds left on this candle. Still respecting the fact that we're on top of it. This 5 minute candle, still respecting the fact that we're on top of it. This 5 minute candle, still respecting the fact that we're on top of the new week opening gap. We got 9 minutes left on this 15 minute candle. The dollar is still retracing a little, pulling back a little. Let's look at the 1 hour chart. Lose focus on that. Don't want to lose focus on that. Okay, so the 1 minute. The 1 hour. We got 39 minutes left on there. We've wicked outside of the SIBI, but the body is below the new week opening gap thus far. We still got 39 minutes left on the hourly. Right, we still are the bearish bias is still intact on the hourly. We came back into a premium on the hourly. Also, didn't quite get to 62% OTE on the hourly, but we did come back into a slight premium thus far, and we're still the bearishness is still intact on the hourly. Let's go back down. 1 minute still. 1 minute. It did close below it there. It did close below it there, but we quickly closed back above it on the 1 minute. So the 1 minute is still flirting with the new week opening gap. Got 2 minutes left on this 1020 candle. It's still respecting the fact that we're on top of the new week opening gap. Again, we did get a closure below on the 1 minute. Then we quickly went back above. Let's see if this 1020 candle on the 1 minute is a prelude to what's to come. Or will we continue to go all the way up, up, up? Let's look at the other indexes. We didn't do that today. Yep, divergence. I knew it without even looking at them. I knew we was gonna be having some kind of divergence because the way the price trading, right? The Dow, see the Dow from here. The Dow came from here and dropped. NQ came near, it went up. ES is the red-headed stepchild in the middle. All right, so the NQ is the strength leader. The Dow is the laggard, and the ES is the red-headed stepchild in the middle. I already knew it was some divergence without even looking because the way it's trading. It's not trading very low resistant-ish. It's not trading very low resistant-ish. Let's look at the dollar. Dollar came back down into this BISI. Right. Would have liked to seen it come a little lower than that, but it is what it is. I would have liked to see it come a little lower than that, but it may be exceedingly bullish. So it's just dropping in for a second to push back up. Bullishness is still intact on the dollar. We're consolidating here for a few minutes. Got 5 minutes left on this 15-minute candle. 5 minutes and 34 seconds. Got 30 seconds left on this 5-minute candle. Eight, 7, 6, 5, 4, 3, 2, 1, 0. Okay, we're still respecting the mean threshold and the new week opening gap. We're still in between the mean threshold and the new week opening gap on the 5 minute. For those who don't know, this line at 44.8675 is the mean threshold of that 15-minute order block right there. And then the top of this purple rectangle right here is the top of the new week opening gap at 44.85. So price is respecting both. It's respecting the mean threshold and it's respecting the new week opening gap. Both of them are doing their job. So price is ping-ponging in between these two. All right. Getting the push up on the 5 minute. We're getting the push up on the 1 minute. Watching the high of this new week, this old new week opening gap. What is that going to do with price? What is that going to do with price? Let's go. Where's our high? Up, we're pushing up above our high. We went up above our high on the 5-minute. We got a 5-minute break in market structure. Let's see what happens. The 5-minute gave us a break in market structure. The 5-minute gave us a break in market structure, and we're quickly rejecting. Let's see. Can the 5-minute push and get us a closure above this break? The 5-minute has given us a bullish break. Has given us a bullish break. Show why I say that. Because this high came down and took out, well, made equal lows. We took out that low, we took out that low, we took out that low, made equal lows there. So when we took that out, that was a bullish break in market structure on the 5-minute. Now let's just see if it was a stop hunt to go down or if it was a true break in market structure. And what are we looking at for that? We have bearish order blocks here. We have bullish order block here. We have opposing order blocks. So if we get a nice push above this order block here, coming back down to this order block here, would lend to a buying opportunity in the scheme of a market maker buy model. A market maker buy model. Yes. We have 1 minute and 48 seconds left. Let's see if we continue to respect the mean threshold of the 15-minute order block. We have 1 minute and 36 seconds left on the 15-minute candle as well. This is going to give us a 15-minute busy right there. 15-minute busy. 15-minute busy right here. I can remove this, remove that. Get out of my way. Get out of my way. Oh, we're coming down. We may not have a busy here. That might not be a busy. We coming back. I may have spoken too soon on the busy. I may have spoken too soon on the busy. No disrespect to my lesbian friends. So this may have been a stop hunt. This 5-minute has gotten back below the new week opening gap. It has gotten back below the new week opening gap. Oh, wait a minute. It has come back. It has come back to the low, almost to the low of the SIBI that we had got on the top of. It came back to the low of the SIBI. Okay, the 5-minute closed right at the low of the new week opening gap. Right at the low of the new week opening gap. So the 5-minute is still respecting the 15-minute order block. The 15-minute is still respecting the 15-minute order block. The 15-minute is still respecting the 15-minute order block. We have a 15-minute busy below us. There is no 5-minute imbalance. It's just a 15-minute imbalance below price. There's no 5-minute imbalance. We got a 5-minute break in market structure. 5-minute bullish break in market structure. Are these candles too small for y'all? Are these candles too little? I got a lot going on the screen. Okay, so an hour. Now we got 28 minutes left on the 1 hour. Still respecting the 1 hour civvy. The high of the civvy is at the high of the new week opening gap. On the hourly, we're still respecting it. The 15-minute is still respecting that order block. Right. On the 15-minute, we did poke up into this very small. There's a very small imbalance right there that we poked up into on that 10-15 candle. It's a teeny tiny 15-minute imbalance that we poked into right here, made by the 7:30 candle on the 15-minute. Tiny imbalance right there that we tapped into, wicked above, and came back down. Right there on the 15-minute. Shot up there, came back down, respected the order block. Anybody still in here? What's going on, man? Anybody still in here? 36 people still in here. Somebody talk to me, man. Y'all say something to me. Talk to me, man. Y'all say something to me. Ain't nobody gonna say nothing to me. Y'all talk to me. Come and talk to me. I see you still in here, E-Rock. I really want to know who else. Oh, come and talk to me. I see Thomas Chan in here too. I really want to know who else. I feel so lonely when y'all do not talk, especially when Taryn won't say she's listening to me. I feel so lonely when y'all will not chat. It blows my mind because I pull up every Monday. Talk to me, talk to me, talk to me, baby. Presente. Okay. What's going on? Let's see. So 15-minute guide push, 5-minute guide push. So the 5-minute, yes, you definitely leaving now. Bye. Okay, the 5-minute bullish break is taking effect. 5-minute bullish break is taking effect thus far. We got a nice push up on that 1030 candle. The bullish break was on the 1025 candle. On the hourly is in the OTE range. The hourly still has not shifted bullish. The 5-minute, as we said, shifted bullish. Now the 15-minute is attempting to shift bullish because we are getting displacement here. This order block, this potential order block is an early sign. This potential order block is an early sign that the bullishness may be shifting. Until we break this, if we break this high, that would be a bullish shift in market structure, which we are at right now. So that high right there of 44.9150, if we break that high, that would be a bullish shift on the 15-minute. Then that potential order block right there, like I said, that's an early sign that it may be shifting. This is the actual shift. A break above this high right here is the actual shift. So the 5-minute shifted bullish, the 15-minute just shifted bullish. So it's looking like the power of 3 concept for the New York. Let's see something. Let me see. Let's go here. So 3 o'clock. So from 11 to 12. Let's see if we get something from 11 to 12. The London closed time zone. The London closed time zone. We'll get the low in the London open to get a high over here. Or will it flip the script and give us a high in the London and a low over here? The way we're trading with this high resistance, it's hard to say. I thought we got above that high. We didn't get above that high? Oh, we didn't. We didn't get above. Oh, we got above this high right here. We got above that high. This high. This is the high that would be the. This is the high from the drop. This is the actual high. We came down, set the order block, then dropped right there. So I was looking at this one when I said we shifted bullish, because this was the high from the drop. All right. But this right here is the actual high. But either way it go, it's bullish now. It's bullish now. We're well from this to that. We're well bullish right now. All right, we're very bullish right now on the 15-minute and 5-minute. Going back up to retest the high. Going back up to retest the high. Got 19 minutes left on this hourly candle. 19 minutes left on this hourly candle to respect this hourly order block right here. 15 minutes left on that hourly candle. Why am I looking at that as an hourly order block? Because we went up, right? Hit resistance, came down to an anticipated level of support with this fair value gap and this breaker, reversed course, and then sold down past it. Right there. So once we trade down past, open up that candle there, now that's qualifies it as a bearish order block. Came down to an area of support right here, pushed up and sold off past it. Bearish order block. 5-minute, 15-minute shift bullish. Still got divergence. Dow still lagging. ES fighting, come back up and test the highs. I mean, the NQ fighting to come back and test highs. ES redheaded stepchild in the middle. Why didn't 1 minute Sibby starting at? Why didn't 1 minute Sibby starting at 1027 work as a short? You tell me why it didn't work as a short. Witchblade. I'm still here, but I'm working 2 jobs and in school with you. Oh, that's my brother. That's my brother. 1 minute Sibby at 1027. You tell me why it didn't work as a short. Let's find 1027. You said a 1 minute Sibby at 1027? I got a 1 minute Sibby at 1028. What platform you looking at it on? Witchblade. What platform you looking at it on? Okay, we're pushing back up, retesting the high. Again, the 15 minute, 1027 on Trading View. I don't have a Sibby on 2027. I'm right here. That's the 1027 candle right here on the 1 minute. That's the 1027 candle right there. There's a Sibby at 1028. And you said why didn't the 1 minute Sibby starting at 1027 work as a short? You talk about this Sibby right here. The Sibby is named off of the candle that makes the gap, right? So you don't say starting at 1027. You just say the 1028 Sibby, right? Because that's the Sibby. Yeah, true. You use the 1027 candle to the 1029 candle like that. But when you call out the name of the actual imbalance, it's the candle that made the imbalance. So the 1028 Sibby, right? That didn't work as a short because on the 1 minute and on the 5 minute, the bias had shifted bullish. The bias had shifted bullish on the 1 minute and 5 minute. So when you're on that time frame, if you're on the lower time frame and it has shifted bullish, right? You don't trade against that bias until you get to a higher time frame point where you anticipate price to reverse. You see what I'm saying? So on the 1 minute, we had shifted bullish back here. When we broke that high right there, we shifted bullish. We came back down into the imbalance and we pushed up and we respected all the down close candles here, right? We come here, we consolidate a little bit, we push up, right? We blast up, we come down and do a stop run, right? This was just a stop run right here where you're looking at this right here. We came up, did a stop run and rejected off of it. Now, remember what we say about stop runs. When you run the stops and reject, what's your draw? Your draw is the high that sent you there. If you run stops to the sell side and reject, your draw is the high that sent you there. The bias is still bullish on the 1 minute. So you won't try to jump in here and short off of this stop run. Why? Because we came down and we rejected, and I mean, we was talking about this. We said the 1 minute is still respecting the fact that we're on top of the weekly, the new week opening gap. So the 1 minute was still bullish. The 1 minute was still, we said it at this time. The 1 minute still respecting this. The one right here, we said the 1 minute broke below it, but we quickly went back on top. In the 1 minute, still respect. Then we got to push up, right? So nobody should be trying to short right there. Did I lose anybody with that? Was that clear, Witchblade? Hey, Witchblade. You know my uncle Switchblade? Yeah. Blade uncle, Switchblade. Yeah, Witchblade. Yeah. Do his girlfriend Butter Knife? Oh, okay then. Yeah, all right. Hey, did I? Okay, clear. All right. Hey, I'm getting hot sitting up under these lights. I feel good about the price reading today. Coming into it, y'all got an opportunity to see me get a bias wrong. And when you get the bias wrong, you just say, hey, I got the bias wrong. My bias was to take out this sell side based off what price had done, right? But when we first came in, we had already said the power of 3 was bullish. We came in saying if the bullishness is to continue, this power of 3 was an opportunity to get in. And once we looked at, I said, but based off what price has done on the lower time frames, I was looking for the sell side, right? And did we get this right here? No, see, we did not even get below that low right there, right? We did poke below that one. But that's why I tell y'all, bias is a hussy that's for the streets. It will flip on you. But you just trade what you see. You trade what you see. So feel good about the tape reading. I feel good about, everything we looked at. The only thing that wasn't accurate on today was the bias of taking out this low right here, right? But everything else played out to the T as the candles, as the candle printed, as the candle showed what it wanted, talked about what the candle was showing what it wanted, and I feel like it did everything that it showed that it wanted, especially in a high resistance environment. Hopefully I was able to help somebody today. Hopefully you take something away from this. And so I'll see y'all next Monday, man, for another exciting tape reading with Timmy. Does anybody have anything before I go? Been on here for an hour and 19 minutes, and I'm going to go hydrate a little bit and then get ready to go to the gym. You're very welcome, Witchblade. You're very welcome. Here to learn and share. You're very welcome, E-Rock. You're very welcome, Kim. If all hearts and minds are clear, we're gonna call it, man. I'll see y'all next Monday on for another tape reading with Timmy. And if you're very welcome, I appreciate you, Thomas Chun. Hey, if you are a part of the ICT super secret live streams, you better be there Sunday. 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 All right, man. Till the next time. Y'all be safe. I handy trade streets. Big Spot gone.